All right, guys. Welcome to another weekly review for the NASDAQ 100. We have quite a little bit to talk about this week as it relates to the trades of the past week. So before we begin, as usual, let's just pray. God, we just give you thanks again for another opportunity to trade and to discuss ideas. I ask that you'll just be with anyone watching this video. May it be instrumental in helping them to improve in their process. Thank you again for blessing me with this gift. And may we all succeed together, we pray. Amen. All right, guys. A lot to talk about this week. This week, more than I guess any other week in recent months, I posted much more than I usually do. So there's a lot of content on the channel where you can actually track the trades on a blow-by-blow basis, so to speak, to see exactly what happened on the day, right? All right, so as you guys know, and those of you who are new to this, watching this for the first time, let me be categorically clear. I'm 100% bullish on the NASDAQ 100. That's one of the reasons why I like trading this instrument, this indices, because it's very predictable, it's very consistent, and it goes one way. It literally goes one way. From the inception, from if you go back and look at the NASDAQ from when it started, it has always been bullish, which means it continues to make higher lows to higher highs, no matter what. So the only times you'll see a break in that is when the market is doing a retracement, which it does every day, every week, every month, whatever it is. It's 100% bullish. Okay. With that being said, last week, those of you who saw the video will understand what I'm about to say. I did mention to you, this is where the market started last week, okay? And it has gone up ever since. So if you entered a trade here at the beginning of last week at the 6 o'clock candle, you could have still held this trade and you would still have been in profit. There's literally no two ways about it. You would have been in profit for the entirety of the trades for this week. Okay. This is what I mean when I say historically bullish. Now, if you go back and look at a lot of the comments on the mine section on TradingView, you will see that every single day you had people calling out for the free fall of the markets, the bloodbath, people expecting the sells and everything every single day last week. And guess what? Every single day, the market did the same thing where it sold for a little bit to the next higher low. And then as soon as that higher low was completed, the market actually went right back into trend, which is creating that all-time high. So the all-time high was broken several times last week. So those of you who have been in buys and who held your buys would have been in tremendous profit from last week. For me, I actually closed my last trade last week. I think it was probably either Wednesday or Thursday. And I decided I'm not going back into the market until I get another signal, which is okay. Because like I said, just like how I say, guaranteed higher lows to higher highs. So if the market makes a higher high, it's guaranteed to come back down and make a higher low. However, remember, the difference is I'm not selling to that higher low. I'm waiting for that higher. All right. That is the important fact. Now, I'm not saying that there are sells that don't exist in the market. All I'm saying is that the sell moves are more riskier than the buy moves. Okay. The buy moves are constant. They're the trend moves. They always come. As long as you take them from your largest higher low, you are guaranteed success in your trading. Okay, higher lows to higher highs. And you can look at this chart. This is the last 2 weeks. I mean, we can go back further and you'll see where the market has been coming from. Okay, guaranteed higher lows to higher highs. There's no two ways about that. Okay, but let's look at the last 2 weeks. Okay, this is where you were. So if you entered here on September 2, you could have still been in this trade right through. Okay. Couple of things that I really want to point out. Those of you who have been following my minds, on TradingView, those of you who have been following the YouTube channel would see and will remember that I made certain observations on the market. And one of the observations that I want to spend some time and just highlight again is the seasonals chart here that you see at the bottom right of your TradingView analysis screen. Now, remember, I highlighted this and I mentioned to you that any year, this, first of all, is a 0% line. This is your 0% line. This is where the market actually starts at the beginning of each year. January 1st, this line gets reset. This is where all trades start from for the year, okay? Now, I mentioned to you that anytime you see, I mean, this is just a basic observation. Anytime that price has broken above this line, all right, usually it happens, you know, around about May, around about the ending of the first to beginning of second quarter. Anytime you see price break above the 0% line, it usually continues towards, continues to the end of the year, right? I made that observation a couple of months ago. Okay. As a matter of fact, when it just actually broke this line right here, I made that observation. Notice it broke the line, it consolidated here for a little bit, all right, before gradually climbing. And you expect to see that trend towards going towards the end of the year. Okay. All right. So a number of things that you want to look at. All right. And this is one of them. So you look at the different years, you have them there, the data is here. Of course, with the exception of 2022, where you had a huge correction, okay? Again, always remember this. What people call a bear market, for me, it's a correction, okay? Remember, every time the market sells, and it doesn't matter how hard it sells or how fast it sells, guys, it is not a bear market. It's only a correction in order to form the higher low on the largest time frame. Okay, let me back that up with facts, because everything I do is factual. Okay, let's look at the monthly time frame, and I will continue to do this until you guys understand the concept. Let me remove these lines and I'll show you. Here we have the NASDAQ 100. Here's a NASDAQ 100 from it started to be tracked on the 0 time frame. This is 2003, okay? Most of you may not have been trading for that long. However, you know, the data is there, okay? So 2003. Notice higher lows, higher highs. Now, this higher low was broken. It created this new low right here, okay? All right. Now, notice that from here, and I'll tell you this much, this higher low here was actually this higher low here was at, well, sorry, this low right here on this time frame, all right, was in fact the lowest point that the Nasdaq went since it started. All right, this is the lowest point. Okay, if you took a trade from here, notice every single high has been broken ever since, which says to you that the market is making higher lows to higher highs. Every single high has been broken. Not so with the lows. Okay? Every single low has fallen higher. Okay? So those of you who are expecting that this NASDAQ 100 is going to be bearish, or you're going to be in a bear market, okay? Think again. Every time you have a huge correction, so this huge correction is in 2021, it lasted until 2022, which is that blue line that I showed you on the seasonals. This was this right here. Notice with all of that selling that took place, all that was created was a higher low. Okay? All that was created was a higher low. And if my memory serves me correctly, this higher low was actually the weekly higher low that was put on this year. So let's check it. Let me put my lines back on. Here we go. All right. So right here, we're looking at the weekly higher low. Let's go to the weekly chart. Let's go to the weekly chart. Here we go. The weekly higher low that was put on Yeah, this was a weekly higher low. Now, you might be saying, why does this say lower low? Okay, and I'm still calling it a higher high. I mean, sorry, a higher low. That is because although it's a lower low right here, it's still higher in relation to all of these lows that you saw here. So it's still technically a higher low. Okay. When you go on your monthly, you'll see on that monthly time frame, it registered as a higher low. So remember, the concept of the Auber strategy is you take your largest higher low to your higher high. Okay. Now, if you go in on a trade and let's say the 1 hour, okay, let me just show you something real quick. If you go in on a trade on the 1 hour and it says higher low, okay, and it continues to retrace, let's say we took this one here, higher low, it went to a higher high, but look at this, it dropped and it came all the way back down here. It simply means that this was not your largest higher low. Let's look at it. So let's do the back testing, and back testing is always important. So this is that higher low that you'd have taken on your 1 hour. And he says, well, Auber strategy says if you take your higher low, the market will continue going and you will never be in a loss. Well, please note that I've always said, and I will always say, it has to be your largest higher low. So let's say, as most of you like to do, you don't zoom out to look at your larger time frames. Remember, time frames run large time frames from the 1 hour all the way up to the 23-hour. Most people only look at the 1, the 2, the 3, the 4-hour, the daily, the weekly, and the monthly. Well, what happens to those other time frames in between all of those points that we just mentioned? Between the 1 hour and the 23 and the daily, there are actually 23 hours, 23 different time frames that you have not paid attention to. Now, you will not see those time frames if you just have the basic subscription on TradingView. You have to have the premium subscription and above to be able to analyze every single time frame like that. But going back to this point that we just made right now. So I'm going to mark this point here. Okay. So let's say it took that higher low. That's the higher low that was on the 1 hour. Okay. But notice the price actually retraced over the next couple of weeks, and it went all the way down to this trend line. Well, let's examine this. You said this was your largest higher low. Well, let's look at the 2 hour. 2 hours also at a higher low. Okay. Well, let's look at the 3 hour. Notice the position at the 3 hours in, this is at a lower high. So this tells you that this is not your largest higher low. You have all these time frames above. Let's look at the 23-hour, for example. The 23-hour is actually at a lower high. So that's not your largest higher low. Remember, the concept is you want to be able to take your largest higher low and then you continue buying. That is going to be a trend trade. Okay. All right. So enough of that. Let's go back to this week because we're looking at the review for this week. So let me go on the 1 hour and look at what happened. So on the 1 hour, this was Monday. All right. This was the move from Monday. This was the low of Monday. This was the high of Monday. Okay. Notice price retraced for a little bit and it continued. Okay. Then you had a lower high that was completed. This actually finished with a lower high on Monday afternoon. If you're tracking it, it retraced here, didn't put anything on, but it came back and retested this area right here before dropping to create this higher low right here. Okay. So if you got in here from the previous week, which I did, I was holding this trade from the Friday before. If you got in here, guess what? You came up here, nice take profit, nice trade to begin the week. Exit, okay? You wait again, because remember, when you exit, you're waiting for your largest higher lows. And remember, you have to be monitoring all your time frames, all right? So this would have been, if you exited here, wait for a larger, your next higher low. In this case, the 1 hour was the one that was creating the largest higher lows, all right? So you exited here, you have no business going back into a trade until you get your next higher low. The problem that most people have is that they can't wait. or they feel like they have to trade every single minute, every single hour of the day. Yes, that's the problem. Every time you lose a trade because of lack of patience. So if you took your profit here, okay, all right, and you exited, you're waiting for your next higher low. Even if the price did this and it came back, notice, although it moved the lower high here, notice it didn't move it by much. So you'd have wasted all of this time with this retracement only to come back right here when you could have taken your profit from right here. Trust me, between here and here, it's not that much difference in terms of price. I mean, the money that you'd have made. So you take your profit, waited, slept for the whole night, okay, waited until what? This is London session, 10 a.m. before taking your next higher low the next day. Okay, doing the same thing, price went up, taking your profits. Even if you take your profit here, okay, guess what? You don't go back in another trade until it comes back down and makes a higher low. So even if the market continued pushing up, which it did, you wait for it to come back down and then you take your higher low. So look at it. You went up again, higher low. And I remember this trade. I actually took this trade. I actually got in, I think it was right here. This was Monday, Tuesday, Thursday or Wednesday evening. I got in here. Price came up. This was when we had the big inflation data. We had that big drop. It actually came and dropped above my entry. So although it went up and I was in profit and I didn't take my profit, it dropped. But guess what? I didn't panic. I waited. Market came up. I was able to get out of my trade. I actually got out right about here. Market came up, continued buying up. Yes, I would have missed that buy, but it's okay. Guess what? You take your profits and you wait. It's about discipline. It's not about chasing how much money you can make. The money will come. Once you have the concept and you have the discipline, the money will come. So it went up here. It did this. I'm waiting. Next higher low was here. On Friday, believe it or not, I did not take this trade. I did not take this trade. And I remember, I think I saw some comments on thing. Oh, you missed your next higher low. Well, fine. Guess what? I already took my profits. I'm out of the market. I'm just waiting for another opportunity that suits me. I didn't want to take this higher low because it was only a higher low on the 1 hour time frame. I wanted to see something more for me to decide that I wanted to go in. And one of the reasons why I actually did not take this trade is because guess what? The market at this point in time was trading at all-time highs. This was an all-time high that was broken here. It was broken here again. So I needed to see something more. So I didn't take the trade. So yes, I missed all of this move on Monday, but that's okay. I'm waiting for my next higher low in order for me to actually go in and take my next trade to the higher high. So that was it. It was a very straightforward week last week. It was one of the easier and more consistent weeks, for trading the trend. It was very clear last week. Okay. And let me just be categorically clear and say this to you all. If you're really serious about trading the NASDAQ 100 and being in profit, learn to trade the trend. Learn to trade the trend. Okay. The more you try to go against the trend, okay, is the more you increase your chances of getting trapped in a sell. If you do not understand the sell, don't mess with it. Your safest thing to do is to trade the trend. Okay. So this is where the market ended on Friday. Am I going to expect a retracement? Absolutely. I'm expecting a retracement. This is where we ended on Thursday. Market retraced. I didn't like that retracement right there. I wanted more. So I was waiting. I was being more patient. And the other thing too is that if you notice, this is the trend line that I drew last week. Notice every time price came down, interacted with the trend line, broke, it went up. Okay. Same thing, came back down to the trend line, went up, broke it. Okay. I didn't take this because I wanted to see price coming back down to this trend line. And the other thing, why I decided not to take that trade, okay, was this wick right here that was left on Thursday from the inflation data, I still believe that the price needs to come back and fill this wick. And I'll show you why. If you look at your 45-minute time frame, okay? If you look at your 45-minute time frame, price was actually here. Okay, price got to here. It dropped down. When it broke this previous high, okay, when it broke this previous high, it should have put on a new low. This is in fact a new low, but it did not register. Okay, that typically happens on days when you have increased volatility and you have days when you have large reports that's coming out. And the 45 minutes is not the only time frame that this occurred on. So you have the 45 minute, you have the 30 minute, the same scenario. You have a 15 minute that has the same scenario. You have a 5 minute. Where is it? Where is it? Where is it? 5 minute. The 5 minute actually created that low right there. So from between the 15 minute and the 45 minute, okay, nothing was registered. The new low was not registered there. Okay. And if you notice, the other thing is that this new low would be coinciding with this trend line, where it has come every single time to that trend line, broken it temporarily, okay, interacted with the trend line before going up to the higher high again. It didn't do it this time. So that's one of the reasons why I was a little bit cautious about it. And that's one of the reasons why I did not take a trade on Friday from that higher low, because I still thought that the market was going to come down. And it's okay to wait, because remember, I'm waiting only for one thing. Okay. So that is the important thing right there. I'm still expecting that price may come, or it should come, to actually cover this week right here. So, and especially because it's trading from that higher high point right now, I know the market is due for some sort of correction. Excuse me. And usually when you see that level of upper level consolidation, okay, the drops to the next higher low can be hard and fast. So there's no reason to rush those trades. Absolutely no reason to rush those trades. It's just a matter of waiting on the setup. So really and truly, if you notice, I drew this zone right here. I'm expecting price to at least come down here. If it gives me a solid break below this line, so if I'm going on my 1 hour, okay, if the 1 hour comes and breaks Friday's higher low, that's now going to be a new low. Okay. Now, if we have a new low right there, now you're looking at a new trend forming on the 1 hour. Now, don't get it twisted. Whenever you have retracements, you will see breaking structures on your lower time frames, because that's necessary in order to create the higher low on your larger time frames. As long as your larger time frames are still making higher lows to higher highs, that's the only thing that you actually have to worry about. As long as they are making higher lows to higher highs, you know the market is still in trend. All right. So that's one of the reasons why I always tell you, I do not analyze on my smaller time frames. I look at what my larger time frame is doing, and then I look to my smaller time frames to give me those entries that I'm looking for. All right. So that was basically last week. Market continued in trend. It made higher lows to higher highs. That was the reviews. I did post a lot of content this week, so you should be able to go back and see everything that the market actually did and how it aligned with the analysis that I posted. So thank you guys for watching. The next video that I'm going to be posting later on tonight is going to be my analysis for the upcoming week. What am I expecting? Is the market going to continue shooting for another all-time high again, or is the market due for a correction? So stay tuned, tune in to watch that, like, share, and subscribe to the channel so we can get more content as time allows. All right. Thank you guys again for watching. And God, thank you again for your blessing. Thank you again for this opportunity to share We ask that you'll just continue to be with us, help us to practice, to improve, and may we all be successful. Thank you, and again, we pray. Amen. All right, guys, take care. I will see you next time. Bye.